back. Still tuned into markets and pretty good going for the frontline index. It's 58.17, so we're higher by just about 0.5%. 113 points up for the Sensex. 19,256. As pointed out, it's real estate that's really driving the gains, and the market breadth is holding up pretty firmly. Let's get in Ashu Madan, COO at Religare Securities, who now joins in to assess the fundamentals of the market. To start off with, Ashu, what's taking everyone by surprise is the kind of gains that we're witnessing for the broader markets. What do you make of this kind of a momentum? Would you still remain cautious?
Yes, certainly I think one has to remain cautious, but this is not very surprising because see, normally whatever you say, it always happens that prior to the budget there are expectations built onto it. We keep talking about that this time we are going in a budget with the least expectation, but end of the day, everybody puts their hand on their heart, somewhere or the other they are optimistic, they are expecting, they are positive. So there is always a long trade in whatever sector, specific or overall index. So there was nothing. So and also the fall was culminated by the mid cap carnage which has happened. So I think the market was so depressed, down and out. So this kind of a bounce back was expected because the major carnage was happened in mid cap. So because of that, the stress spread to across the market. So once you see these kind of syndromes or phenomena in the market, everybody tries to be risk averse, and left, right and center everybody comes to selling. So I think that typically we witness that even the frontline stocks bore the brunt of the market, and I think most of the stocks crashed from the recent highs which they have made. So I think some bounce back was definitely expected, that some semblance will come back, because it was though the mid cap carnage was select skewed mid cap crash, but overall it disturbed the sentiment across the market. So probably that was the reason that I think and plus obviously the expectation, there was the overbought situation because of the budget plus expiry. So everything put together, I think the reaction was much severe than it should have been, and so some semblance has coming back. Yes, the caution is still there, because the dent which has happened, it is not that suddenly it was a typical simple overbought situation because of an event that has squared off and we witness a V-shaped recovery or a U-shaped recovery. Right. Obviously there would be recovery. If you ask me a question,
Ashu, let me come in out here. Ashu, let me come in out here. So my question really is from the perspective of somebody who's listening to you right now, because you probably expected the recovery. Not many people would have. What would you advise now? What should one do if it's a nimble trader? Should he still get into the market on a long, because this could extend upwards, or would you probably advise going short once this is carried on for a bit longer? And which sectors or which stocks would you recommend?
Exactly, I was coming to that. My last leg to, the question was this only, that if you ask me that to go short at these levels, probably no, because I expect the market to, probably it can go to somewhere around 59.50 also, the frontline indices. But if you ask me that if that is the call, would I go long? No, for that. I would wait for market to further go up, because currently at every rise, I think people tend to get short, because when we are coming out of this kind of a situation, the first trade normally, the easy trade is to go short that the market is not going to hold. So with that view in mind, I would still feel that market can further go up to probably closer to 6,000 or 59.50. I think that is the time probably I will go short. But currently with this kind of a bounce back, for me the market is in no trade zone.
Ashu, if you had to take an investment call on the real estate space based on the business models, the balance sheet, the management, would you buy into any of the stocks in this sector for a long-term perspective?
See, for me, I think as far as real estate is concerned, for trading, obviously like IB Real, HDIL, there are other stocks. When you see this kind of a carnage, obviously there's a bounce back, but that is for a trading call. But otherwise, I think other than DLF, nothing enthuses me. I think probably that is the only stock with the management, with the execution capability, with the premium on their brand. Obviously, if you look at their launches, the way they are encountered with overall, I think that's the only stock if I have to be in the real estate.
What about IT, Ashu? I hear you say that it is a no trade zone right now. For somebody who has existing trades in IT and on the long side, would you recommend staying long? And any stocks where you recommend probably even booking profits in the IT space?
The IT honestly has surprised us. I mean, post-Infi results, most of the IT stocks have outperformed the market, and probably the dollar rupees equation has also favored them. So my current take is that it has already run up. If somebody is holding a stock, somebody was, I mean, some smart investor or a trader was. I was not, to be honest. Or some smart investor or a trader was. Somebody can say that he bought Nifty at 2600. I think with a trailing stop loss it can run. But I feel that somewhere this rally in the IT stocks will terminate, because the current rally further substantiated or fueled by the dollar rupee. So I think any positive note on rupee, you would see some reaction in frontline IT stocks also. But I think they are holding, and because there was no belief trade in that, and it is not that Infi is being held by. If you look at the correction in the past few days also, I think IT stocks were immune to that correction, which clearly shows that they are in a strong hold, and I don't see immediate problem in holding these stocks. But to buy at these levels, obviously it's a difficult call.
And what about the auto sector? Given that the February auto sales numbers were rather disappointing, there has been quite a bit of news also coming in on individual counters. M&M is down and out today. Would you initiate any tactical buy calls in this sector?
No, on the contrary, I think that probably the purple patch for autos are over. I mean, if you look at the macro fundamentals, if we have to live with the GDP which is 5.5%, I don't think so. That is a very gung-ho scenario for auto companies. So probably I will have a word of caution on auto stocks.
Okay, Ashu, just before we let you go, one word on Reliance Industries. The street and their aunts are bullish on the stock now. Are you bullish as well?
See, if I see that there is a recovery in the market, I think Reliance should participate. On the contrary, should outperform. But at the same time, if you look at on the screen since last 2 days, that strength is not there. I mean, screen is trying to tell you something else. So I think I'm just watching Reliance. Yes, I agree that people are talking bullish. There are positive fundamental calls also on this stock. But I think screen is trying to tell you something. So I think let it go by another 10-15 rupees, probably that then we'll get into a safety net that it can go up by another 50 rupees. But till it crosses 850, I would not be bullish in Reliance.
Ashu, we'll let you go on that. No, thanks very much for joining in with your perspective on the markets as well as individual stocks. Well, you have quite a few stocks from the large as well as the mid-cap universe which have rallied on account of brokerage recommendations. Goldman Sachs on L&T, Exide as well as the Jubilant. Let's bring on board our research team to find out what exactly the brokerages are bullish on. We've got Darshan to talk about L&T. Ajay is here joining